Ready to go?
We are ready to go when you are.
Okay, all right. We'll call this meeting to order, the work session of April 28th, 2025 at 5:14. And discussion for tonight is a presentation for the FY24 audit. And I'll let this go to the city manager.
Yes, thank you, Madam Chair. I just wanted to introduce Karen Tarver. She's on the screen here. She's a partner for LG Rayfield LLC. They're our certified public accountants who provided they'll provide the presentation and the financial statements in the packet for the FY24 audit. Welcome aboard, Karen. Thank you.
Great, thank you. As Heidi introduced me, I have served as the partner on your audit this is our second year, and we are glad to be working with you. And tonight the goal is to go over the reports we issue as a result of our audit. And there's two documents in your packet. And can you hear me okay? I know you said earlier it was kind of quiet.
You're still quiet. If you could crank it up just a little bit more, that'd be great.
Okay, great. I will talk louder.
Yeah.
So there's two documents in your packet. One is the letter to the council, which is a shorter document, and the other one is your audited financial statements. And so I thought to go through the letter to the council first. And does everyone have access to that? You don't really need to follow along. I'll touch on the high points, but I could also share my screen if you'd rather have something on the screen to be following along with.
If everybody in council chambers and online, do you have the packet in front of you? Council members, if not, she can share the screen. Everybody okay with what they have in front of them? Okay.
Okay, great.
You're good.
Thank you. So the letter to the board is required communication that we, your auditors, need to make with those charged with governance. So you being the council, as well as members of senior management, are what we consider those charged with governance. And the first section of that letter talks about our responsibility in relation to the financial statement audit. And there's some key things to take away from this. One is that your financial statements are actually the management's responsibility. And while we assist in putting them together from your books and records, management retains ultimate responsibility for those financial statements, as well as the internal controls that they need to have in place to make sure that the information is being captured and reported accurately. So our responsibility really is to issue an opinion over those financial statements, looking at them to make sure that they are what's called materially correct in accordance with what's called generally accepted accounting principles. And since you are government, you follow the Government Accounting Standards Board, essentially rules on how to account for and report your information for the year. And so for fiscal year, the year we're looking at is for June 30, 2024. And we are responsible also in doing our audit to let you know if there's any significant matters. And so this letter kind of goes through the significant matters related to the audit. And so we let you know that the planned scope and timing of the audit was consistent with our planning. We also need to let you know that we remain independent. Again, we're serving as your independent auditors. So while we may provide some assistance to management, it is their ultimate responsibility to make decisions as far as how items are reported in your financial statements. We identified the significant risks related to your audit. Those mostly related to issues that were noted in your previous audit, and then we designed our audit approach in such a way to address those risks. You did have one significant accounting policy change. That is called, again, GASB, which is Governmental Accounting Standards Board. Statement number 100 was issued, which is called Accounting Changes and Error Corrections. And as part of working with management this year to put your financial statements together, there was one item that was reported in accordance with that new standard, and that was a change in how one of your funds is presented in the financial statements. And we get to the financial statements, I'll explain that more. We also need to let you know what significant estimates are included in your financial statements. And so on page 2 of that letter at the bottom, the first one is the management's estimates related to your pension and OPEB. So that is the state PERS plan, basically has liabilities as well as assets related to that plan. Those numbers primarily come from the state, and they have the estimates related to the numbers that you ultimately report as part of their audit, and actually have actuarials that help determine those estimates. But again, management is considered responsible for those estimates. The second one at the top of page 3 relates to your accounts receivable, specifically tax assessments and other governmental agency receivables. What management has to do there is look at what does it expect to collect. So while you may bill someone for a receivable, there is what's called an allowance for doubtful accounts, essentially, and that is an estimate of what might not be collected, and that is reviewed on an annual basis. We also reviewed the financial statement disclosures. Those are the notes to the financial statements, to make sure that we feel like they were clear and neutral and consistent with prior year as well as standards. We're happy to report we had no significant difficulties during the audit or disagreements with management. We did have a report to, we're required to report, excuse me, if we have any significant adjustments, basically, as part of our audit. And so at the middle of page 3, we did have some material adjustments that were detected as part of the audit, and management did correct them, and those are reflected in your financial statements. These primarily related to how how revenues are reported in your governmental fund statements. There is a concept basically that says you can't recognize revenue in governmental fund financial statements until it's both available and measurable. And so measurable would be that you know how much someone owes you and that they owe it to you. Available under GASB means that it has to be received within 60 days of year end. And so there were certain receivables that are kept on your books, which it does make sense for internal purposes to keep those, but for financial reporting, those are not supposed to be recognized as revenue unless you got them within that 60 days after year end. Instead of showing them as revenue, they're supposed to show as what's called deferred inflows, which is a balance sheet account. So we did have an adjustment related to that. We also had corrections to a grant receivable and cash. Again, cash got payable, an amount received was posted to cash, but the cash was received after year end. So it should have still been a receivable on your books. And then the retirement expense and liabilities. This is something that we had brought to management's attention last year, and your contract accountant worked on it some, but unfortunately there were still adjustments related to how the pension plan runs through, how the payroll system is set up for your pension plan. And so there's additional work that needs to happen related to that account. So we did have some corrections there. And then the last one related to your sales tax related payable and expenses, there was an adjustment discovered when we did our work over those accounts. We also had what are not considered material or significant adjustments, but one related to how some of your lease related accounts are reflected in your books. And then separately at the very bottom of page 3, this was a bullet point we had last year as well. You have several, I think there's probably 8 to 10 deferred revenue accounts is what they're called, for all different purposes. These, based on the research done kind of by management and provided to us, are small amounts of donations that were made in the past for specific purposes primarily that have not been expended per your books. But through discussion, it's a little bit unclear as maybe these could have been expended, but just the adjustments made in your system not made to recognize that instead of being deferred revenue, these should have been moved over to revenue when they were released from that restriction, essentially. And I'll pause here just if Heidi wants to add anything related to those accounts, just to help you put into context the accounts that I'm talking about.
Yes, thank you, Karen, through the chair. So these are those orphan counts that we talked about before, and I hadn't brought them back up yet because they're still in limbo. But that's the Hospital Guild account. There's a BP account from a donation from several years ago, the share from the RV park. Susan Lake. Yeah, there's a couple of smaller donation accounts from the past that are still kind of open in this limbo. That we have done some research in the office on those accounts, and I have a box of files by my desk. We're just still working through the process of what or how to close these accounts out. So, thank you.
Thank you, Heidi. So at the top of page 4, I mentioned already, we didn't have any disagreements with management. We do get, and it's attached to this letter, what we call the management representation letter. This is a list of representations from management, as the name indicates. Basically, again, they're asserting to us certain things regarding the internal controls they've put in place and the work that went into maintaining your records, which are reflected then in your financial statements. We do also ask about consultation with other accountants. For this purpose, we did not consider your contract accountant as this type of consultation, but obviously you did engage an external bookkeeping service to assist with your accounting during the year, and we conferred with her during the audit as well, and she helped assist getting your books put together for year end. And then basically other information in documents containing audit financial statements. This is letting you know that there is other information that basically some of the schedules that are in your audited financial statements are basically not considered part of what we call the basic financial statements. And so those we don't issue an opinion on. And so that's kind of what that paragraph is telling you. And then on starting on page 5, these are what we call our reportable conditions. And so the first one is reported in more detail found with your audited financial statements. And this is kind of a summary of that, but it is your, so it's finding number 2024-001. So this is somewhat similar to what you had last year. But the, I guess, difference that I want to make sure I'm highlighting is that the books and records were put together and wrapped up essentially for our use. They were much better than the previous year. And really the issues, the bullet points here under finding 2024-001 are really specific just to these specific accounts. And so we found that really the records and the amounts in your financial statements through kind of management as well as using the external bookkeeping service were in a much more ready to audit state when we started our audit. So I would like to commend Jan, because I know she does a lot of the work for you, and Heidi and kind of those also involved in financial reporting, because we saw a significant improvement in the conditions of the records ready to audit. And then we also feel like there was a much higher understanding of what was needed, you know, for the audit, for financial reporting. And so we feel like, you know, while we did have, these are all related to those significant adjustments that we just went through, we feel like these can all be addressed in your next reporting cycle. And then the other thing we have listed in our letter is the prior year findings. So as I mentioned, you did have a material weakness over internal controls over financial reporting. And this was, we don't have all the information in here. This is a summary of last year's finding. But again, we consider this repeated. But again, as I mentioned, this year's finding is much more focused to specific accounts, where last year there was kind of a general lack of timely reconciliations related to financial preparation. And then you also had a second finding last year, which was the lease implementation. So that was a new standard that Seldovia had to implement, and we had to provide a lot of assistance to basically help get it to the state it needed to be. And so again, our recommendation last year was that there was increased training related to that and better kind of tracking. And we felt that that had been resolved during this last year. So I will pause there, see if there's any questions on the letter to the council.
Are there any questions from council? Looks like we're still good to go. Thank you, Karen.
Yeah, I'm good.
Oh, is that you, Jack, or?
It was me, Vivian. I'm good for now. Thank
Okay.
you.
Okay.
Okay. And I know you guys have a lot on your agenda tonight, and we got started a little bit later. So I'm going to give you a very high level overview of your financial statements, and then we can kind of dive into if there's some specific questions. But again, your basic financial statements are the statements and the notes. So everything in front of the notes, including the notes, is what's called your basic financial statements. And then that's followed by what's called required supplementary information, which includes certain schedules for your pension and OPEB plans, as well as a budget to actual for each of your governmental funds that adopts the annual budget. And that required supplement information, called RSI, is on pages 43 to 40, actually 43 to 50. And those budget to actuals, what you might notice if you compared these financials to last year's is that those included in the RSI are at a department level. So basically these should correspond directly to the budget that basically you've approved and is presented at the essentially budgetary authority level. So in this case, the departmental level for those major funds. And then what's after the notes, or actually after the RSI, is what's called additional supplementary information or supplemental information. And again, you have budget to actual schedules starting on page 53 for your major funds. And these provide you a much higher level of detail, essentially. So this includes, salaries or benefits or travel, right? So again, it's a useful tool providing you more information. And then for each of your what we call non-major funds, there are also there's combining balance sheet, combining statement of revenues, expenditures, and changes in fund balance, as well as budget to actual schedules for those funds that are considered non-major. And then again, you didn't trigger what we call a single audit this year. So a single audit would be if you expended over a certain dollar amount of federal funding or over a certain dollar amount of state funding, then you would have to have a compliance audit as well as a financial statement. And so we call it a single audit because we do one audit that has both those parts to it. But you guys didn't trigger that. And so we do have to, though, because you're a governmental entity, we use what's called government auditing standards, which means we have another report. It's towards the back of your audited financial statements on page 68. And that is basically letting you know that we look at internal controls over financial reporting, not to issue an opinion over your internal controls, but to help plan our audit. And then we also do the same thing with compliance. We're looking at it from a high level. You do have processes in place to make sure that you're staying in compliance with your own internal, policies, procedures, as well as external, maybe statutes or regulations you're required to follow. And as I mentioned, the finding that was included in the letter to the council on page 70 provides you in a much broader description, essentially, the cause and effect and impact, essentially, of that finding related to those specific accounts that we had material adjustments for. And then the last 2 pages is that we also have, and we get from management, a summary schedule of prior year findings. So again, management's letting us know what they did related to prior year findings, as well as the corrective action plan, the very last page of your bound financial statements, which again is management letting you know through this document how they plan to correct the material weakness for this year. And so as far as our opinion letter, that is on page, 1. And so our opinion is what you want, which is the second paragraph. This is called the unmodified opinion. So basically, I mentioned we have to look at your financial statements to see if they are materially correct in relation to basically accounting principles that are generally accepted in the United States. And our opinion units, again, there's multiple opinion units, is the aggregate of everything, which is called your governmental activities, and then each major fund. So that's any fund that equals 5% of all the other funds is a major fund. And then the aggregate non-major funds. So that's all the smaller funds, they all get added together as one fund. And so we create separate audit approaches for each of those opinion units and different materiality levels for each of those opinion units. And that's how we approach our audit. So again, it's the opinion you want, which is an unmodified opinion. It talks about the standards that we had to use, the basis of our opinion, also describes the responsibility management, which we went through with the letter to the council, gives you lots of information about our responsibilities in the audit, several bullet points there, describes the required supplemental information, which again, as I mentioned, anything after the notes is called supplemental information. For the required supplemental information, we actually don't issue an opinion on that information. And then in addition, at the top of page 3, the second paragraph down there is management decided to omit what's called the management discussion analysis. That's a narrative comparing prior year to current year, and it can be bound together with audited governmental financial statements. It does not impact our opinion at all. It's just GASB likes to see that accompany audited financial statements, but in talking with management, I let them know most of our small governments don't provide that, because really they're already providing you that information throughout the year. And so it's almost just extra work on their part to put together, a narrative, a report essentially that would accompany your audited financial statements. And so again, that doesn't impact our opinion on your financial statements. The supplemental information, which again is the latter part of your bound financials, we issue what's called an in relation to opinion on that. So in relation to your basic financial statements, that information is materially correct. And I already mentioned, so within our opinion letter, we'll let you know that we did our audit in accordance with government auditing standards. So as far as kind of some quick financial highlights, I guess maybe I'll pause here, see if there's any questions about what we've gone through, or see if, I know you guys have had a little bit of time to maybe look at these financial statements, but maybe not too much, but just see if there's any specific questions, just in the interest of time. Maybe you can help me know where to focus the next few minutes of the presentation if there are specific questions.
Does anyone have specific questions for Karen? I don't think so. I think we're good to go, Karen.
Okay, then I will just at a very high level again, pages 4 and 5 are what's called your government-wide financial statements. And so again, these are all of your all your funds, which are all considered governmental funds. And these are on the full accrual basis. So all revenue, all receivables are included, all payables are included, any long-term debt. So basically, there are certain things that are accounted for differently between when you're doing your fund financial statements, which is on what's called the modified accrual basis of accounting. Modified accrual basis of accounting means that long-term debt is not included. It also means that capital assets are expensed. So as you think about it, it's more in line with how you budget. If you know you're buying a piece of equipment, you budget that as an expense for the year. When it moves over to your full accrual, to your government-wide financial statement, that expense moves to be an asset, which is then depreciated over time. So there's these differences. And so within your financial statements, page 6, for example, is your balance sheet for your governmental funds. And then page 7 is a reconciliation that shows you the difference between your modified accrual and your full accrual presentation. And then the same thing for your statement of revenues and expenditures for the year on page 8. And then it has the reconciliation on page 9. And then page 10 moves into the notes. And those are really good to read. They help you understand the significant accounting policies that the city has adopted, as well as can provide more detail on some of the balances that are included in your financial statements. And so just to highlight kind of a little bit about the results of last year as reported in these financial statements, if you look at page 8, this shows again each of the major funds, which is the general fund, boat, harbor, water, wastewater, your federal and state grant fund, and your permanent fund. And then all other funds are grouped together to be called other governmental funds. And so in total, for all your governmental funds, basically fourth number from the bottom in the very right-hand column, you'll see that you had overall an increase of $355,107. So that was an increase to your bottom line. Now you'll notice the wastewater column has no activity in it, and then it's taking out what was their beginning balance and moving it over to the other governmental funds. So I mentioned GASB 100, which changed how we have to present when a fund moves from major to non-major. So wastewater had been major in your 23 financial statements. This year, it didn't meet that 5% threshold. And so it moved over to be part of your other governmental funds. And so this is the presentation that we're basically showing how the beginning balance was there, but then the billing balance is moving over to be part of your non-government or other governmental. So I wanted to highlight that just because that is a change from last year to this year. Another change I wanted to highlight was that for your, on page 6, one thing is that you'll notice if you go down to the bottom portion of page 6, which is your fund balances. So this is, again, assets minus liabilities equals your fund balance. And you'll see that, you know, if we look at the general fund, for example, we have restricted for capital projects, 86,000. Then we have committed, which is your major maintenance and repair account. So that's the account that's the amount that basically has been committed for that amount. And then there are other amounts that internally you guys have assigned for different purposes and maybe set up separate bank accounts for. But within the general fund, those can't be presented as assigned because of the fact that you don't have, your total fund balance isn't enough to allow you to assign. So you have to show restricted and committed. And by showing that and basically you're committed and restricted total more than your total fund balance in the general fund. So therefore, in the general fund, you have what's called a deficit of unassigned fund balance. So essentially, of of your fund balance, you've committed all of it. It's either restricted or committed, and you actually are kind of in the hole, if you want to think about that, as far as you don't have a cushion right now, from a budgetary standpoint of having equity to cover maybe unforeseen expenses that come up. Working across the page, the boat harbor, that fund balance is assigned. Same thing with water. Your grant fund has a deficit also. That was more expenses incurred essentially than grant funding came in or was earned in that fund. Your permanent fund is again that money you've set aside for future growth and then possibly, using the earnings in the future. But again, this is basically making sure that you have that money set aside. And then within your other governmental funds, you can see that very top line, there's 196,000 of cash in other governmental funds. In the back of your financial statements is the combining balance sheet for those other governmental funds. And basically one of the things that I wanted to kind of touch on quickly, because it is a change from last year as far as the presentation, is that I'm sorry, I'm getting to the page so I can tell you, it's on page 60. And in the Harbor Improvement CIP Fund, you guys have maintained an account within AMLIP that is specific for Harbor CIP. And so in this year's presentation, working with management, they helped us understand better, and have reflected in the financial statements that particular account, the AMLIP account, plus amounts that are due from just general dollars in the general fund are reflected as assets. It's the second column from the right under the Harbor Improvement CIP Fund. So in total, that fund has basically 212,000 of assets. There are included in that amount 146,000 of deferred or revenues collected in advance. So again, that's that money that you have been historically recognizing or using part of it each year. And then the fund balance that you have is related to some quite old adjustments that were posted in your system. And that balance was carried forward for several years, and management's working on making sure that really is assigned fund balance. We feel comfortable. It's how it's been presented in many audit reports for many years. But again, that's something that management's going to look into over this next year. It's quite old. It's money that predates, I think it was 2016. And then there was some of it that came in 2017. And so that is something that management will be looking at this next year. So those are kind of some of the highlights, the changes from last year to this year. And I will stop there if there's any questions.
Does anybody have questions at this point? Any questions or comments? You still have a lot to share with it yet, Karen, or?
No, that was, I know, sorry. I knew you guys, you already have your whole meeting coming up next, so I didn't want to take too much time. Wanted to just make sure I communicated everything, so that you're aware of kind of how the audit went, and then highlight some of those big changes in your financials from last year to this year. And I just wanted to reiterate that, yes, we had to give you a finding again this year, but we did see a lot of improvement, and felt like you guys are on the right path as far as pulling together those financial records. We had no internal control as far as like AP, payroll, kind of the day-to-day accounting. That's really not where our finding relates to. It's more that higher level, like, okay, yes, this is how you account for it on a day-to-day basis, but when it comes to putting the financial statements together, you have to do it a different way. It's kind of gaining that understanding that we feel is why we had these adjustments that we had for this year. But we really appreciate Jan, does a lot of work for you guys and for the audit, and as well as Heidi, was on many Zoom calls with us answering questions. So we appreciate both their time and effort, and we're available year round. So, if questions do come up related to your financial statements, please feel free to reach out. We're happy to talk to any of the council members if there are questions.
Thank you, Karen. Yeah, I really like to see the presentation was great. And it's always usually over my head every time we do this. It's like, oh my God, how much information is there? But yeah, I like the concept that we are moving ahead. The
Yes.
Seldovia is moving ahead. The staff's doing a great job. And you recommend, I saw you recommend again, that we have that external help with our getting ready for the audit, continue that process to help Jan out. Yeah, I like to see that. Yeah, thank you. Anyone else on council have comments or questions for Karen? Harmy, your hand was up earlier. I'm not sure if that was a hand up or just the kiddo pushing it.
No, that was me just reconnecting to the conversation, but this has been excellent information. Thank you so much for your presentation.
You're very welcome. And Madam Chair, I guess I'll just double check that I don't need to attend the council meeting. It was just the work session you wanted me at, or did you want me at the council meeting as well?
Well, I would let our city manager answer that.
Madam Chair, I believe the intent was for Karen to be here for any questions during the work session. And then if anything comes up during the council meeting, we can get back hold of her, but not to have her have to stay online for that.
Right. And if there's no questions from council, I'll ask our city clerk, is there anybody in the public who have any questions or comments?
I'm not seeing any hands raised at this time. So
Okay, great. All right. Well, thank you, Karen, very much for all your incredible information for us. And good to see I mean, truly, that Seldovia is moving ahead.
Yes.
Yeah.
Thank you all. Good night.
Okay, good night. Thank you. Okay, so we will adjourn here shortly and then our meeting will follow. What time? We got about 10 minutes. Can we stay on, city clerk, maybe stay on this line and not have to dial back in?
yep, we can stay on this link for the meeting.
Okay. Okay, so we will follow this meeting at 6 o'clock.
All right.
Okay, adjourn this meeting.
Okay.
Okay, thanks.
Thank
Thank
you,
you,
Vivian.
Madam Chair.
Yes. Oh, was that a question?
I was just saying thank you.
Okay, you bet.